Hi, this is Randy Finney with Right Side of the Chart, and today's Friday, December 9th, 2016. It's a little after 4:30 today. The markets are closed. And in reviewing the charts heading into the close and afterwards, some of the things that stand out to me are really a lot of these components in IWM. I know there's quite a bit of frustration. I've been burned on the IWM trade, and I know quite a few in the trading room. This crazy rip we've had since the elections, the U.S. elections, is really close to. I wouldn't probably say it might not fall categorized as a Six Sigma event, but damn close to it. This has just been a tremendous rip. I took a look at it, measured it out, compared it to some other rips in the past, and it's not the only rip. The one way to do that when you're trying to quantify a move to see if it's happened in the past, just draw a trend line on it. Take that trend line and drag it. What it gives you is both the scope of the move, meaning from top to bottom, how far IWM went, and the duration. You have that, and this was a near vertical rip, meaning the duration wasn't very long. It's just been a few weeks. So you drag that around, and you can see, moves like this. Here's one off the bottom. It didn't even come. And it's rare to see a move like this. When you do have them, you had a couple back here, they come after very sharp corrections. These are the oversold, short covering rallies. And there's only been, again, a few of those. And those that came near the top, like this one, you can see was faded. So, again, a very, very rare occurrence, and that's what a Six Sigma event is. It has to do with probability and statistics. But, again, I don't know if it falls under that category, but this is, you can see it on the daily chart, almost unseen. This kind of price action. And I'll tell you, something that's just been driving me crazy to no end is it's a very unnatural looking rip. When I look at the individual components, it reeks of program buying. They all went up, especially the financials. And I'm going to go over real quick in this video, tell you, I think that we're still looking at an imminent and a pretty sharp correction, and I think it's going to happen next week. The way the charts are priced now, and I'll go over those, just a handful of chart patterns here within IWM, some of the top components. If it's going to happen, it's going to happen next week or never. Otherwise, these chart patterns, which are now stretched to their extremes, will be foiled. But again, I put a very high probability. And for those of you that followed me for a while, there's a difference of being stubborn on a trade, or sticking with a trade because you believe in it. Maybe I was wrong earlier, which I certainly was on the IWM short officially on the site. But that doesn't mean that you just turn away, walk away from IWM. And I have no problem doing that. If you followed me for a while, there's trades I'm stopped out on. Or trades that are hit for a price target, profit target, and sometimes I never look back. I move on to the next one and don't even put two thoughts into that stopped out trade or whether it was successful or not. But IWM I've been tracking, and this one looks ready to pop. Let's just run through the charts real quick on the IWM, the Russell 2000 Small Cap ETF Index. You have, first and foremost, that positive divergence that I've been pointing out. It's been building for years, has never, ever gone away. And, my expectation I've maintained for probably over a year now, that the next bear market, when it does come, will be most likely a very long, drawn-out one, not like the meltdown in 2008 that we had that was over, might not seem like before we knew it, but it was relatively quick. That bear market back then lasted just about a year and a half, I think it was, if that, 1.6 years or so. But this was one of the longest bull markets, second longest bull market in history so far. And I expect when we finally do roll, when these divergences play out, if they play out, and again, I wanted to point out they're still intact. I thought they were going to play out here. They didn't. We had an overbought reading. We had negative divergence. We pushed up, made another divergent high. So we are once again overbought on the weekly time frames. The divergences are intact. Let's go down to the daily time frame. What this looks like, I have many different boards and variations. This is a rising wedge pattern, as was this one. It's not uncommon to see a rising wedge break down, back test, and then the correction play out. In a few instances, you have a back test and then what you call an overshoot of the wedge. An overshoot can happen before the wedge breaks down. You can have a pop-up to the upside of the wedge. This was a high-level back test, and we've overshot the wedge due to that momentum. And this is more of a longer term picture. What I really wanted to do this video was to talk about the near term next week, maybe a quick pullback, trading up, shorting up. But it's not unusual to see on a wedge overshoot a very violent and fast reversal back into and then below the wedge. So I'm not really planning on list long-term price targets if this pullback that we get. And we all know one's coming soon. Nothing goes up forever. Statistically, this rally is very overbought, very extended. We have negative divergence now showing through on the daily time frame here. We had divergence here, and it did play out for a correction. So I know there's a lot saying technical analysis doesn't work. Well, this wedge projected more than that. I thought it would do more, but it did nonetheless play out. That negative divergence there played out close to the minimum move. You take the distance of the wedge to get an idea. Here's the widest part of the wedge, which is that, and then you add it to where the wedge breaks down. So that really played out to the measured move of the wedge. But again, here we are. We shot up within that wedge, and let's just look at the 60-minute charts because that's where I want to spend my time. That's where I'm seeing at least what I believe to be a very clear technical pattern. We have, and again, we had divergence here. I pointed that out at divergent high number 1, and that started to play out. And if I'm not mistaken, and I could be wrong, that might have been where we added that last IWM trade. And then we had this almost unnatural rip. That is high frequency trading. You see these just very straight line up, just like this. This is program trading, program buying. The market was caught off guard, and IWM, for those not familiar, I mentioned this in the trading room the other day. It is comprised of, let me go, I'm looking at another monitor here, almost 20% in financial stocks. And you'll see as I go through the top components of IWM here in a second, just a handful, you'll see many of those are financials, and the charts almost mirror each other, which tells me the funds went in there and just bought anything with a name bank on it, regional bank, etc. A lot of regional banks in the small cap index, more so than you're not going to see the Bank of America and those mega banks in there. So it's again a lot of regionals, and then information technology comes in second at about 17%, and you have a lot of semis in here like Advanced Micro. But we're going to start out here, IWM. If you look at this line here, let me highlight that. I'll turn that white so you can see it a little better. There's your big bearish rising wedge pattern. Divergent high number 2. So again, the first divergent high did play out. I just want to make that point that sometimes divergences are burned through, but more often than not, and I would say much more often than not, when confirmed, when they're clean divergences, meaning you have clean separation between the peaks like you do here, those divergences do play out. And like I typically say, it's not a hard set rule, but the larger the divergences, the larger the ensuing move once you have that trend reversal, which the divergences are indicating. So we have negative divergence. It is now confirmed. You guys know I like to use that term, confirmed, unconfirmed. I don't know if it's used elsewhere, but in my book, divergence is only confirmed once the MACD or the PPO, which we need to use in this case. This move was so sharp, and the scaling on this chart, there was such a big price gain that the PPO is going to work better than a MACD on a big price move like this, sharp move. So whether you're using a MACD or its cousin, the PPO, that bearish crossover, which we now have, confirms the divergence because that put in a lower high. You have divergence here on the histogram, this trend indicator that I use. You have about a roughly equal high, it looks like. That's about a horizontal line. So roughly an equal high against prices making a higher high here. So there's divergent high number 2. There's your wedge. This is your minor uptrend line. This is the one that I believe will be the catalyst for the correction, which is likely again to happen next week. Or maybe not at all, because we're now getting to the point where most wedges break down, give or take. It's not a hard rule, about 70% towards the apex of the wedge. I've seen varying statistics, but you can just take a look at the wedge. They typically don't break out right here by apex. They don't break out this early on. So a spark down, and again, I covered this in yesterday's video on AMD. I touched on IWM, I believe. So something like this, maybe a move down, possibly one reaction on there. Is another high possible? It is, but I don't expect it. So I would think of a reaction there. And remember, what goes up straight, it's like throwing a rock. You throw a rock straight up in there. The harder you throw it up, the faster it's going to come back down. This was a near vertical run. It doesn't appear as much on the 60-minute, but when I just showed it to you on the daily, it clearly showed that. So I think things will be pretty quick. I wouldn't try to game a bounce there. But I'm just drawing out my expectation, and I'm looking at minimum a move down to that 132-ish area, and quite possibly any or all of these targets all the way down here to 125.80. Now, all this, if it does pan out, has the potential to really, help firm up a bearish case or the case for more downside on the longer term charts, but we'll just take it as it comes. And I know a lot of traders have been burned on IWM lately and want nothing to do with it, and that's fine. If you don't ever feel comfortable in a trade, don't take it. But I would be remiss not to point out these bearish developments on this chart and the fact that not just a pullback, but a pretty healthy correction is very, very likely at this point, whether that pans out or not. Let's see. That would be if we get back down to the 125.80 area. That's almost a 9% drop. But even if we just pull back, I should clarify. A minute ago, I said 132 would be my minimum target. Let me just be clear here. This 130 level, that would be my minimum target. So let me take this line off. I'm looking at the charts. I had that line up beforehand. 130 would be my minimum downside target, and that would be from today's close, drop of 6%. And then again, we'll take it from there, see how the charts look, see what everything else is doing. All right, now let's just live in the world of the 60-minute charts for a second. I'll go through these very quick and make my point. Again, although financials are the largest sector, the largest holding in IWM is Advanced Micro Devices, and I did an extensive video on AMD yesterday, so I'm not going to spend any more time on the charts than just highlighting the 60-minute chart. This is a very clean bearish rising wedge. What I mean by clean, I just mean numerous reactions on the trend line there. Takes the right shape of a rising wedge. It is confirmed with bearish divergences or negative divergence at this most recent high. And you have a lot of levels, very well-defined support levels to watch for on the way down. So maybe it wants to work its way a little higher in the wedge. But if not, or if so, either way, you have, of course, the uptrend line is probably the most significant support level. Then you have a horizontal support around 980, a very nice, well-defined support level at 1919. So for those of you looking for just a very quick pullback. But look at it this way. If the wedge breaks down, that level's just below the wedge. More than likely, if the wedge breaks down, you're heading down at least to this 827 or even this 776-ish level. And to try to quantify it, so I would tell you right now, my minimum expectation for move down in AMD is 827, and that's almost a 20% drop. And if you watch the video I put up yesterday, the case has been made for a 50% or greater drop. And I know that sounds ridiculous to some of you who are new to trading or super bullish right now. But again, if my thoughts are in that video. You can take a look at that video, and I think the case was made there that in the next year or so, AMD is quite likely, poised to drop 50% or more. And again, that goes back to a chart history of 32-something years and showing you all the previous technical setups that we have right now on AMD. All right, let's go through these a little quicker. TSRO, this is a biotech, which is also it's a significant part of the IWM, but more so the biotechs caught an initial very strong bid with the Trump pump, after the elections. But we've since seen a lot of those gains faded. Seeing biotechs like Tesaro it's kind of fizzled out here and has been moving lower since. There was a minor uptrend line. This is a big 60-minute downtrend line to watch. We had a divergent high in place again. So point being, these divergences, again, much more often than not, is the way I should phrase that, do pan out, especially when they're confirmed, clean divergences, and confirmed with other things such as trendline breaks, etc. So there was your divergent high. You already had a decent correction, which was good for a good drop of 15 or so percent. Stock has pushed a little higher, and now it's flirting with a pretty important trend line with a few reactions there. MSCC, semi. Again, this is the infotech part, the second largest component of the IWM or technology stocks, and the semis make up a good deal of those. Micro semi, just a beautiful chart. If you're looking for an individual trade setup, you can see the reactions back here, numerous reactions on the 60-minute chart, some clear reactions there, and it's been riding up that trend line right there. So this trend line has been more than validated. You can see divergent high here building, put in a second, another consecutive divergent high, so you have the negative divergence in place. And even after this wedge breakdown, I may have pointed this chart out in the trading room, you did have a correction. So again, the divergences did play out, and they did play out for about what they should have. If you look at the drop from where it broke down to here, there you go. Look at that. I mean, almost perfect. Measures, as I said, the widest point of the wedge. Bring that in tight. There you go. So that played out. Now, what does that tell us? Well, let's say that the wedge now at this point, this is a different trend line, a little bit wider wedge. Not really a wedge because you had this different top, that different angle there, but I would say that minimum it's going to play out there. And if this trend line breaks down, yeah, I'll tell you what, there is some support right there. A little bit of support, but I really favor a move down to this level on micro semi 46.53. So tremendous amount of meat on the bone if you want to short that one, about 16, almost 17%. And if this gap is entered, it'll most likely be backfilled, and that's about a 20, almost 24% drop. Ozark, I shorted this one the other day in the trading room, posted that, and still am short. I mean, the chart, I'm underwater on the trade, but this is a beautiful chart. It just doesn't get any better than this. Bearish rising wedge, confirmed with negative divergences. Now we're really pinching, getting up towards that apex of that wedge. You can see there, the apex or where the 2 points, the 2 trend lines come together. So this guy is ready to pop any day now, and any day will probably be on Monday, if not early next week, or it's not going to break down at all, or it's going to keep going higher. These divergences get burned through, certainly a possibility, but I doubt they become any more extended at this point. That's the other possibility. Maybe the PPO and RSI and everything push up, make another high. I just don't see it. I don't see it for a lot of things I'm looking at right now in the charts. RSPP, I don't see anything there, so nothing worth mentioning. XPO, Industrial Integrated Shipping and Logistics Company. There's your trend line there, but you also have this minor trend line here to watch. A couple levels, again, not one of my favorites, just one I'd point out. You can see the divergent high. That's the most important thing to note. Look at the negative divergences in place. PDCE Energy, I didn't mock the chart up. I don't really care for that one much. SEB, Seaboard, look at that beautiful price channel. Very even parallel trend lines. Price channel, some very impulsive selling, and I noticed that too today. A lot of distribution. As I go through my list of the holdings, I have these sorted by market cap. Look at all the red, a sea of red, yet IWM was up today. But a lot of these stocks we're seeing some profit taken on today, and these divergences, that's what tells me that a impending correction is very likely. SNX, Kidex Corp, look at that, nice clean rising wedge, very well defined, nice uptrend line, negative divergence, very overbought. You can see the last time the stock was this overbought on this same time frame, we're on the 60-minute time frame. It fell from that point 15, almost 16% after the run that we just had, and this very steep bearish rising wedge. This pattern looks more bearish to me than this. This was just a little run up, a little gap up, and it still gave up that much after being so overbought. And we didn't even have a divergent high at this point. So therefore, I would expect as much, if not more, of a drop. We'll do a few more and we'll wrap it up. I think the point's been made, especially when you get to these regional bank stocks. As I said, these charts are all near mirror images. They're these bearish rising wedges, very steep. This one started to crack today, broke down below the uptrend line. Now, because these stocks are, it seems to me, especially these regional banks, are grouped together so tight. They're a component of KRE, the regional banking ETF. And they're also, I think they're subject to program trading in that ETF. If there's inflows and outflows going into the ETF, then, or the regional bank sector as a whole, that money is being allocated among all those stocks equally. So what's going to happen? In other words, I use a term a lot, birds of a feather flock together. This has been a very, very tightly correlated sector, these regional bank stocks. So if you see one go down next week, you're probably going to see them all go down. I don't mean that literally, but you get the point. They're all going to crack at once. Here's another one, Prosperity Bank Share, bearish rising wedge. Negative divergence. There's your price targets. This is a pretty good support shelf right here, this 63, 64 area. If that goes and things get ugly, now that would be your near-term pullback targets. If you want to, swing for the fences on these trades, You short these guys on the break tomorrow or next week if we get a breakdown of the trend lines. And again, you can watch the individual components. You can trade KRE. You can trade IWM because it's so chock full of these. These guys let it up. They will most likely lead IWM down on the next correction or pullback. So one option you can short. If you're playing the short game, meaning is in golf, the near term game, like when you're up on the green, you just go for any of these near term targets. If you're playing the long game, meaning you're swinging for the fences, then what you do is if they start to pan out, you can trail your stops down, or you can set a stop to either break even, set your stop at entry, or trail your stops down to protect profits. And just in case this market surprised a lot of people on the with the move to the upside, let's say it happens to surprise everybody and just fall very sharply in the coming weeks, there'd be huge gains to be made. So what you could do is trail your stops down or just manually lower your stops along the way. You might give up a little profit if it bounces back and you get taken out, but you do leave the door open for a very big move if things get ugly and this stock is headed back down here. That's about 21% to drop. Otherwise, just go for these quick pullback targets, and that's a safer bet. And there's about a 10% drop or about a 7% drop to the first target. And I think we'll wrap it up here. There's a chemical company, REITs. Yeah, let's just leave it here. All right, guys, this has been Randy Finney with Right Side of the Chart. I will keep the charts updated on Monday. And I don't think I'll put any of these as official trade ideas at this time. I'm debating that. Let's see how the markets open Monday, because it's after the close right now. If I put these out there and we gap down below these patterns, we may not get objective entries. So maybe if you're watching this video and after hours, you want to get ahead of these. Remember, we haven't broken down yet. There was a couple that I mentioned that just started to crack below, but for the most part, we're still within these patterns. So there are times I do like to get ahead of a trade, and personally, I am still short the IWM and some others here, some individual regional banks, but I have plenty of room to add to these guys, and I think that's something I'll most likely do next week. If you have any questions, just drop me a line in the trading room or shoot me a private message. This has been Randy Finney with Right Side of the Chart. Have a great weekend.